All right. Can everyone hear me? How is everyone doing? How is everyone doing? I hope everyone is doing all right. Let me turn off the music real quick. So, let's get it started. Good morning, everyone. Good morning, good morning, or whatever your time zone is. Currently, it's later in the day for me right now. So let's get it started. I have a few things I wanted to touch on today, and I had a question in the Telegram as well. For everyone, I had a question if everyone was struggling the past week or if everyone was doing great. And there were a lot of people that were struggling, and it's not something that surprised me, to be honest. Why is this? But well, mainly because I think if we take a look at the chart right here, we were in low probability conditions. As simple as that. So that's something I want to touch on today. Let me just do something right here. Oh. Let me see. All right, perfect. So let's get it started. So I just approach it the same way as I do in a Zoom. So for my mentorship, I usually talk like this. I have a Notion next to me on my other screen. So I have everything I need to get over with, essentially. So let's begin. These past few weeks have been an absolute mess, in my opinion, and I've been struggling as well. So if you've been struggling, don't worry, I've also been struggling, and I think a lot of people have been struggling, mainly because these things and these conditions, they are low probability in my trading model. My trading model is normally it's a trending model, so I mainly focus on trending days. And when these conditions on the dollar happen, these are low probability conditions for me. Now, the thing with this is, if the dollar is in low probability condition, then this of course affects everything on the major. So that's ES, that's NASDAQ, that's EU, that's GU, that's everything gets affected. And this is normal. These are normal conditions. But a lot of people after a week like this will switch up everything they know, and they will start looking for the next best thing. And that's what I'm here to tell you. These conditions are absolutely normal. So if you are struggling in these conditions, then you don't need to change anything. Because I see a lot of people on Twitter, they start to switch to turtle soups, for example, whilst that is not their normal trading model. And of course, not hating on anyone that's trading turtle soup, do your thing. But if your normal trading model is just a trending condition and it's a 2022 model, for example, and suddenly you're switching up, then you have to question yourself if you are even ready for this journey. Because if we take a look here on the dollar, this move right here was pretty predictable, right? We came into a monthly busy, then we pushed up, came into a monthly volume imbalance. Everything was outlined perfectly. Then here, this was also pretty predictable. We had our breaker here. Then right here, we swept this low. After sweeping this low, everything changed. So right here, on the end of this Tuesday, on the 18th of April, in the mentorship and even on my YouTube, I talked about it. These are seek and destroy conditions. So we knew at the end of 18th of April, so let's say the 19th of April on a Wednesday, we knew there are seek and destroy conditions. Seek and destroy conditions for my model are low probability conditions. Now, and that's where the fun things come in. Low probability and high probability conditions are not a binary thing. And that's where a lot of people go wrong. These conditions, yes, you can still win in these conditions, especially if you have a seek and destroy model. Then it's a total different story. Because then you're performing even better in these conditions. But if you have a trending model and you see that you're struggling in these type of conditions, then no, this is normal. And then again, low probability and high probability conditions are not binary. So if you know binary, it's either 0 or 1. So it's either off or on. When I tell people it's low probability conditions, they automatically assume they're going to lose. That's not low probability condition. It's low probability. It's not losing condition. Again, you can still win. But let's say you are trading $1 million capital. Let's put it in perspective, because on a 10K account, everyone wants to trade this stuff. But let's say we have $1 million in capital. Then the whole perspective changes, right? Then it's a whole different story. So if we have the data to support it, that these low probability conditions have a win rate of 30%, does that mean you will lose all the time? No, you can still win. But would you risk your money if you only had a 30% win rate? And if you wait and just are patient and wait for high probability conditions, you had an 80% win rate. So would you wait for the high probability conditions? Yes, you absolutely would. And then again, high probability conditions doesn't mean you will win all the time. It's probabilities. Trading is about probabilities. It's not a binary thing. It's all about probabilities. And the only thing you need to work on if you encounter these type of conditions is your psychology, because you will start to doubt yourself, especially in these type of conditions. You will start to doubt yourself. You will maybe look at Twitter or Instagram and you will think, all right, I do think I need something new. You don't need something new. The only thing you need is to identify a low probability condition. That's your model. How can we actually identify low probability conditions? Well, first off, this takes data. We need to gather data. If we gather data and we know our low probability conditions for our model, so we have a trending model, these seek and destroy conditions will be low probability for us. If we have a seek and destroy model, seek and destroy conditions will be a high probability for us. This doesn't go on to say that you need to make a seek and destroy model, especially not if you are not even consistent with one model yet. Stick to one model and just be patient in times like these. And as well, the thing a lot of people do, and of course it's very relatable, I've done it as well, but it's constantly blaming price action. It's constantly saying, price action is shit. It's this, it's that, it's this. I can't do it. I can't do it. You're just focusing on the negative constantly. If you're just focusing on the negative constantly over and over, you are in a negative cycle. And when high probability conditions happen again, then you won't be ready. You need to take accountability. Now, of course, price action is shit. Yes, you are right. It is pretty shit currently for your model. But the thing is, and that's the moral of the story, taking accountability and accepting the fact that these conditions are normal. Now, a lot of people understand. They understand that these conditions are normal, that your model won't work. Everyone can tell you the logic, etc. Everyone knows the theory. But when it actually happens, it's a whole different story. Then people start to doubt themselves. People will second guess themselves. People will think, maybe I'm not ready. Maybe I need to watch 100 more ICT videos and learn about that new sauce and learn about the NWOC and the New Year opening gap and this and that and this and that. No, you don't need it. You need to accept the fact that these are low probability conditions and that this is normal. And then this is where a new hype gets started in Twitter. And again, not taking a shot at anyone, but these are the times when people are in self-doubt, in low probability conditions. That's when people are vulnerable. Their emotions are high. They start to doubt themselves. Guess what? It's the perfect time to start a new trend on Twitter, on Instagram, on YouTube. And now you're seeking for this new holy grail. And someone told you, oh yeah, this is new holy grail. Guess what? It works perfectly fine in seek and destroy conditions maybe. And then the market starts trending again. Then we get these types of conditions again. Guess what? We get a new trend on Twitter, on Instagram. Can you see how this is an endless cycle? you will be stuck in this cycle forever and ever and ever. We move from high probability conditions to low probability conditions every time. And this is something to accept. It's not something, of course, we can learn how to trade this, but in the beginning, focus on finding your model, a trending model or a seek and destroy model. Not both, one model at the time. That's all you need. Now, as well, of course, it hurts even more if you didn't capitalize on these moves, because these moves were easy to trade essentially. This move down, perfect. This move up, perfect. This move down, perfect. Then we reach this and we have a few weeks of consolidation and everyone is freaking out. Well, of course, you're going to freak out if you didn't capitalize on these moves. If you did capitalize on it, and a lot of people can profit, because profiting is not the hard work, right? Profiting is pretty easy. It's not hard. Everyone can take profits. Everyone can make profits. In high probability conditions, in just trending conditions, everyone is genius, essentially. Just like they say, right? In the crypto market, everyone is genius in the bull market. And that's true, because everyone can tell you it's going up from here. And it's very easy to predict, essentially. Now, if you know and you capitalized on these both these moves in the beginning of the year, so January we capitalized on this, capitalized on this, we capitalized on this, it is essential that you don't blow all your profits in these 2 weeks. And that's what happens a lot of the time. A lot of people can capitalize on these moves. It's not tough. It's not hard. Making money is not that tough. It's extremely simple in high probability conditions and knowing your conditions. But keeping your money, that's tough. A lot of people won't actually keep their money. Their risk management will be flawed and they will go into drawdown. And the next thing they will do, instead of risking less in low probability conditions, so you decrease your risk. No, these people, they increase their risk because they are now losing and they think, I need to increase my risk. That's not what you want to do. That's the complete opposite of what you want to do. Now, we want to risk less in low probability conditions and actually keep that money that we made during these high probability conditions. That's the thing we want to do. Now, the next thing, and I think everyone has heard of it, right? Everyone who gets rich quick, they tend to lose it all. So a crypto, a meme coin, like past few days has been, what is it? The Pepe coin, the meme coin, has been going up. These guys that don't have a clue, these 16-year-olds, etc., that just buy it, they become a millionaire, etc., they will lose money. They will lose money. It's the same as you might know, athletes like in the NBA, in football, etc. They tend to make a lot of money, and at the end of the career, it's all gone. Making money is not something that just happens. It's a skill set, and keeping that money is a skill set, and it's a whole journey on its own. It's not just the making money and winning the lottery and then expecting yourself to just enjoy it. No, that's not how it works. All right. So, and that leads me to the last point, and that's focusing on the positive always. You need to focus on the positive. So instead of blaming price action, see, and maybe go back and just do a little back test while we are in this seek and destroy conditions. And I do think we are now getting out of these conditions and we are expanding a bit, because after consolidation, what happens? Expansion. Expansion always comes after consolidation. So if we know this, high probability conditions are around the corner again. This will not be going on for a year. No, expansion will happen after consolidation. Just like we had here, consolidation, expansion, consolidation, whoop, expansion again. This will happen, and we need to focus on that we need to essentially tell ourselves constantly, high probability conditions will come again. We don't need to worry about it. And that's focusing on the positive. And going back in price, and you can see there are low probability conditions around here like this. This is hard to trade, these conditions. Do we need to trade them? No, absolutely not. But if we zoom out a lot, we will see there are a lot of high probability conditions, a lot of trending days that we can trade. And when it actually happens right here, so right now we are just caught up in price, just like we were here, for example. Then it's tough. It's tough on people's psychology. And that's what we need to work on. Trading is 90% psychology. And a lot of people understand this, but nobody believes it truly. And there's a difference between understanding and believing. And that's what I tell a lot of people in the mentorship as well. And I emphasize on it a lot. Understanding is just basically knowing, right? You know, yeah, trading is psychology. It's mainly psychology. But nobody truly believes it. Nobody truly believes it. And that's the major difference. And there are a lot of great traders in SMC. A lot of great traders that know the technicals very well, right? But they don't make a lot of money. Why is this? They never mastered the psychology. They never master their psychology. And again, it's not fancy, right? It's a boring thing. Psychology is boring. It's pretty boring. You can make it exciting, but trading in itself is boring. It's not supposed to be exciting. It's not supposed to be feel like gambling and think, oh, I just won, woo. No, it's pretty boring, and it's supposed to be that way. And a lot of people, after a while, just because they stick to the same model, they tend to get bored. And that's perfectly fine. That boredom is okay. But don't go seeking for a next best thing. That's the important part. And then what I like to call you is a SOS trader. SOS, of course, everyone knows what SOS is. SOS in itself is like help, etc. And you do need help because SOS, shiny object syndrome trader. You are a shiny object syndrome trader. If you can't get past this stage of just seeking for this next best thing, and that's also why I switched my videos a little bit, and I truly want to help everyone. And the thing is, because at first I was like, the most advanced stuff, blah, 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 blah. That's not what it's about. Everyone can get profitable. Everyone can know the technical stuff. If the technical stuff is not that difficult, and again, everyone knows the technical stuff by now. There's 1 million people in Twitter, in Instagram, that know the technical stuff, but they just don't make money. Ask yourself, why is this? It's psychology. It's all psychology. Everyone can master the technical stuff, but only 1% can truly master the psychology. And that's important. And if you can't master it and you're constantly seeking for the next best thing, you're just an SOS trader. You're just a shiny object syndrome trader. And that's what it all comes down to. So again, I see a few questions on identifying low and high probability conditions. These are things you need to identify yourself. And I've touched on them in videos as well, but my model is different than yours. So for me to say this is a high probability condition, this is a low probability condition, yes, there's some truth to it. But again, if you have a seek and destroy model, these might not be low probability conditions for you. And that's very important to understand. So if we take a look, and you can generally, I like to tell people there will be more low probability conditions days during a year than high probability conditions days. And if you just have this expectation, then everything will work out, because this false expectation that you need to trade every day and that there is a trade every day, that will be detrimental. That will absolutely be detrimental to your trading. So just have the expectation, all right, there will be more days in a year where I do nothing And there will be less days in a year where I will actually trade and where I will make profits. And again, it's the same principle, right? It's making profits here. You could have made 10% here, 10% here, 10% here. That's 30%. But what a lot of people do, they blow it all in these 2 weeks because they can't handle the psychology of things. And that's just what it is. It's all about psychology. It truly is. But nobody, and again, I'm repeating myself a little bit, but nobody thinks psychology is fancy. So nobody tends to focus on it. They all think it's about the technicals. It's not. And yesterday in the mentorship, I had a little chat with someone on ICT. And again, not taking a shot at ICT, I'm very grateful for his concepts, etc. But I don't think, and I think the person I was talking to as well, I don't think ICT has mastered the psychology. ICT is a great technical trader. Of course, we know this. He is a great technical trader. But it's the reason SMC even exists. If ICT mastered his psychology with support and resistance, SMC would have never existed in the first place because he wouldn't have had that shiny object syndrome. He wouldn't have gone looking for the next best thing. The reason why we are gathering in this live stream today is because we are SMC traders. Is because we were seeking for the Holy Grail. That's the reality of things. And we wanted a deeper understanding. That's the truth. That you can't deny it. The reason SMC is created, is even here, is exactly because we were seeking for some Holy Grail. And because ICT was seeking for some Holy Grail. If ICT became profitable with support and resistance, we would have traded support and resistance. That's it. And again, we are very grateful for ICT, but it is the reality of things. And it's psychology. Psychology is the most important thing. There are people, and that kind of pisses me off, right? On Twitter, there are people telling these fancy things, and people trading support and resistance make more money than these so-called gurus that all trade fancy stuff. I'm like, how is this possible? Well, it's not rocket science. It's all psychology. It's all psychology. I'm glad you agree, Mohammed. Mark Douglas. Yeah, exactly. Mark Douglas. It's all psychology, and it truly is. It's as insane as it sounds. It's all psychology, but again, it's also risk management. But because we can capitalize on this, we can capitalize on this. We need to apply good risk management in here. So we need to have the right approach, risking less in these conditions, and then it's recognizing conditions. Now, I've went over the conditions before, but the condition is basically right here, and this is the biggest low probability condition for me. We swept liquidity right here, right? And that's all right. So I was still expecting lower prices right here. Now on this Tuesday, we got those lower prices. Then after, we didn't follow through. So there was no follow through of the PD raise. Meaning that maybe we could be in 50% of this range. And right here, we were consolidating at 50% of the range. This is because price is making new market sentiment. It's making new liquidity. We need new liquidity to come into the market. So we have breakout traders above these highs. What happened to them? They got swept. We have breakout traders above these lows. What happened to them? They got swept. They even got swept here, right? We already had this consolidation. Breakout traders, boom. Both sides of the market taken out. We get new liquidity, etc. Edge still matters. Yeah, exactly. Edge still matters, but emotional standpoint, yeah. Yeah, it's very important. And of course, edge still matters, but not as much as people think. Because you could literally buy some random resistance and you could trade support and resistance and you would be profitable. If you all take a look at the what's it called? The FTMO interviews, the My Forex Fund interviews. These are guys that are just trading, and women. These are guys and women that are trading indicators. The most simple shit ever. And as well, some ICT traders. But you notice how the ICT traders that got payouts, they usually have a very simplified model. Well, why is this? Well, if our model is so simple and we don't take a lot of things into account, so we don't have 1,000 lines and 1,000 PD arrays on our chart, what happens? We can actually use our brain to focus. So we have the time and the energy to focus on our psychology, to keep that in check. And essentially, a lot of SMC traders, they are distracted by the charts. And when something happens, so they get angry or whatever, they are still focusing on the chart and not focusing on themselves. And that's very dangerous because you're essentially getting controlled by this emotion. And that's something you need to watch out for and you need to be aware of. Very important as well. Now, right here, these are the exact thing on how I got to the low probability conditions, the seek and destroy conditions. I saw Tuesday was a down move. That's what was expected, but then we didn't follow through or anything. So on Wednesday, you saw it's just consolidation. Then it was pretty clear. Seek and destroy conditions, and we just wait. And that's basically it. Now, of course, in the beginning, you might get caught up in these seek and destroy conditions, and you will not truly see it. That's perfect. That's a blessing in disguise. These past 2 weeks are a blessing in disguise, because next time you will be ready. You will be ready to adjust your risk, to keep your emotions in control, etc., etc. So see it as a blessing in disguise. Now, right here with NFP, I marked out this one, this right here, this little resistance level. And NFP shot up into that level. Now, of course, NFP will do that. Why? NFP is just a fake move first and then the real move most of the time. Of course, sometimes it will just go one way and just fuck off essentially. But most of the times it's a fake move and then the real move. Does this mean you trade NFP? Absolutely not. There's no risk management involved in NFP. So if there is no risk management involved, it is not trading. It is pure gambling. So if you see people on Twitter catching NFP moves, just unfollow them and block them. Honestly, it's the best thing for you to do, because this also creates false expectations for you. They are not real traders, believe me. If someone is trying to catch NFP or FOMC or CPI, they are not real traders, believe me. All right, so we had this move. Now I do like it that we potentially continue down, but I don't want to see us come above this week, ideally. I want to see it continue down off of here. That's what I would want to see. Now, of course, that's me demanding a lot of a price. And we all should have high expectations of price. And if it doesn't meet that expectation, then it's not high probability condition. So set yourself some sort of condition for price, an expectation. I want to see a sweep of these highs, then a breakdown, then a retracement, and I want to enter there. If that doesn't happen, I will not be in the market. And truly sticking to that as well. That's very important. So that's what you can do. And this demanding of price is not necessarily a bad thing. It's a great thing, because then you can identify if it does happen, that's a high probability condition for you. That's high probability condition. Now, as well, high probability conditions are when we are coming out of a higher time frame PD array. Just recently. Those are high probability conditions. So what you saw right here, let me put up the daily right here. And we came into a breaker here, right? This breaker, this huge update. This day is known as a reversal day. Then these next days, they are all high probability days. This day isn't necessarily a high probability day. So you wait, you wait on this Wednesday and you potentially trade Thursday and Friday. those are high probability days. And that's very important. All right. I also think the same, don't need complex things. Yeah, exactly. Just need, it's all about making money in the end of things, to be able to understand the simplistic data driven approach, technical to understand the relationship. Yeah, facts. And the human behavior component. Those whom financial saying. Yeah, exactly. Yeah, facts, bro. Because in advance to the NFP move happening, they have no idea in advance whether the necessary action in human are required to take place in order to facilitate. Yeah. Yeah, true. And also, it's all psychology. And why is it all psychology? Well, if we remember Judas swings, right? Judas swings are basically playing with your psychology. This whole market is sort of made to play with your emotions, to play with your psychology. And that's the scary part of things. Because this Judas swing is essentially a fake move in the opposite side and then the real move. That fake move is just to get you in, to get you tricked in, and then the real move happens. And a lot of people get faked by this move. And a lot of people, even if they know the fake move is happening, they can't even capitalize on the real move. And that's the difference. Now, this week I had one trade, or no, I'm lying. I had 3 trades, and they were all on Monday. I said to everyone in the mentorship I wanted to trade Monday, Tuesday, and Thursday. And this was mainly because Wednesday and Friday, they were low probability condition for me. Now, the reason they were low probability condition for me was because we had FOMC on Wednesday and that pre-NFP thing. And we had, on Friday, we had NFP. And those days are low probability condition for me. So I'm focusing on Monday, Tuesday, and Thursday. Now, next week, I haven't taken a look at the economic calendar yet. Let's do that, actually. Let's take a look. Let's take a look at the economic calendar together right here. I think there was CPI, right? If I'm not mistaken. Yeah, there's CPI on Wednesday. There's a bank holiday tomorrow on GBP and Euro. All right. Ideally, I want to focus either on Tuesday and then Thursday and Friday. That's what I want to do. And just completely avoid Wednesday. So Wednesday is what I would avoid at all costs. Just basically because of CPI. And CPI also ahead of CPI, London, and that brings me back to the same story. It's not a binary thing, right? You can still win ahead of CPI in London, but the odds are not in your favor. And that's something to understand. And this is only the thing you can truly understand if you have data to support the ID. You need to gather data. So after every week, what I do is I gather the data. Not backtesting. So only what happened this week. I just forward test, and the trades I took from this week, I put them in a sheet, in a Notion sheet. And that's how I gather my low probability conditions. And you don't gather low probability conditions after one trade. So if you take a loss, then it's not necessarily a low probability condition just yet. You need a bigger sample size. So you need something like 50 trades, 100 trades, and then you look at the losses. And if you see a lot of the same losses that happen during some sort of CPI event, then you can say, all right, maybe this is a low probability condition for me. Support and resistance, simplicity plus risk management. Exactly. Facts, big facts. Support and resistance is and will always be the main strategy because it's simple and it works absolutely correct. It's simple and people make money off of it. That's basically it. What your guys bias this week is bias change on the whole week, or you change it daily. What I do is that's a little a thing I do, but on the every start of the month is when I do my monthly analysis. So I did my monthly analysis, a few days ago at the beginning of this week. And then I try to see where will the next monthly candle head to. Then, if I know this, so here we have a premature order block on the monthly. Then the next thing on the weekly, and this is what I do on Sunday. So I still haven't done it, but I'm doing it after this a live stream. I go into the weekly and I see, all right, if we use the same monthly context, what will the weekly do inside that monthly context? So if the monthly is going lower, most likely on the dollar, and again, it can go higher, but the bearish arguments currently on the dollar are way stronger than the bullish arguments still. And I'm not trying to call a bottom. Trying to call a bottom is where you will get chopped up. So we swept the previous week high, and we are in the middle of essentially going down. So I know this. Next candle on the weekly would be this. That's the most logical candle I can think of on the weekly. The next candle. After we take this low, so this would be my target, this right here. And then after we take this low, we react. Now on the daily, that's where it gets interesting, right? This is where I can change my bias during the day. So before every session, I look at the daily and the 4 hour. And then I determine what the most high probability bias is for the day. So weekly, monthly, most likely bearish. Daily, on Monday, right here, I would expect lower prices. We're just coming into this daily fair value gap. There is literally no bullish argument currently. There just isn't. Based off of the dollar, there isn't a bullish argument currently. Yes, I could be completely wrong, and it could just do this and go higher and then maybe go lower. Who knows? But there is currently, from what I can see, no bullish argument. So what I would expect here, and what's the most logical, what's the higher probability thing price could do, is reject off of this fair value gap. And then the next few days, this would be the target for the week. So the upcoming week, this could be the target. That's what I would expect for price to do. And then daily is in context of the weekly and the monthly. 4 hour is in the same context. So on the 4 hour, we are already rejecting off of this. Now, the thing I don't like to see is if we do come above this wick. So that would be my invalidation level. Now, we could sweep it, but again, not high probability conditions for me. So that's something interesting to take a look at. But again, dollar is currently, hopefully it's coming out of low probability conditions. So I am seeing some displacement now finally and some follow through, but nothing confirmed just yet. So it's something to take a look at. Hey bro, what duration of data do you have behind your system? Isaac Cell, I currently have, what is it? Like probably a few months. I think from December 2022 is when I truly started this model, I would say. So that's quite a few months. All right, so that was basically all the important stuff I wanted to talk about. If you do have any questions, then you can always drop them in the chat right now. And I'll go over a few questions. Dollar going lower means other pairs will go up. Yes, dollar going lower means indices, Forex, so EU, GU, etc. will all go up, likely. So they're all inversely correlated, essentially. So that's something to take a look at. And when that doesn't happen, that's also a low probability condition. So if dollar is going down, so lower, if EU is going higher, or sorry, if dollar is going down, EU is going lower as well, then this is a low probability condition. And not necessarily because they are moving in sync, but because, because they are moving in sync, but you can't get to a clear bias. Because one should be going higher, one should be going lower. So in your premium membership, do you teach your strategy in order so we can test it too? Yeah, I teach my full trading plan in the mentorship. Exactly. What about sweep below rel then buy side if stays above 50% of the wick? Could we be bullish? What about the sweep below rel? What is rel again? Then buy side if it stays above 50% of the wick, could we be bullish? And do you also give all the metrics that you gather? No, I don't. But my mentorship is not. It's not where you copy my thing. That's not the philosophy behind my mentorship. The mentorship is based off of becoming an individual trader, so not copying anyone, because copying anyone will not get you far in life. So it's mainly based off of creating your own unique model, creating your own data for that model. That's where I come in, essentially. Relative equal lows. Oh yeah, sorry. No, my bad. I should have known. No worries. What about a sweep below relative equal lows, then buy side if it stays above 50% wick? Yeah, could happen. Could happen right here. If this happens, right? Something like this gets swept, and then again, wouldn't really like it. Oh, this is 1 hour, something like that. But again, I would still be bearish. The seasonal tendency for ES is to trade lower for May, but with this analysis, that would mean indices should trade higher. Do you consider this high probability trading against 20-year average? I think seasonal tendencies are absolute garbage if you don't combine them with any price action. So of course, it's something that happened in the past, but I don't rely on them too much. And then again, if we do take into account seasonal tendencies, then we could maybe see something like this. So the dollar sweeping some lows here and then pushing higher, if that makes sense. And then ES could also react accordingly. But I don't like to look at seasonal tendencies, and I just like to trade what I see. How do you frame a low resistance liquidity run and high resistance liquidity run? It's mainly based off of the higher time frame. So a low resistance liquidity run is just something that absolutely pops out to your eye, right? It's something that is so stupidly obvious. So for example, here on the monthly, we came into this volume imbalance right here. So all this price action until this low got swept, that's all a low resistance liquidity run. And everything in here is a low resistance liquidity run. Now, of course, if we are not coming off of a daily premium rate right here, it's not a low resistance liquidity run. So the daily is in context of the monthly. Monthly is going lower. Daily is also in the premium right here. All this stuff right here is a low resistance liquidity run. I also have a video on it on YouTube if you're interested. Okay, thanks for the answer. No worries. Thank you for the question. Let's see, where was I? How to find out when the price removes significant liquidity and when the usual one. In general, how to understand what liquidity to pay attention to. It's an interesting question. Now, there's a few things, right? If you do a top-down analysis, so you go from the monthly, weekly, daily to the 4 hour, and you have your bias set. So every 4 hour price action is in context of the daily. Daily is in context of the weekly. Weekly is in context of the monthly. If we are moving lower right here, then these highs, for example, on the daily, these highs, on the daily, it's just this swing high, right? But on the 5 minute, this is a huge liquidity sweep, and there's a lot of price action going behind it. So this little sweep is actually a sweep because we haven't met our drawn liquidity yet. And that's where we need to essentially gain that trust of trusting our drawn liquidity on the monthly. But because it's a monthly, we know it's so strong. So then these liquidity sweeps, that's something we can trade. And that's the same thing. Turtle soups look very impressive on a lower time frame, right? But what if I tell you, a turtle soup could just be a previous day high sweep into this gap. So for example, this right here. Let's zoom in on this price action. We have this gap, right? We know next day we'll probably trade into the gap and then drop off. Now, this is a turtle soup entry above this high on the lower time frame. Right here. That might even on the, can I go into 1M? Yes. See, on the 1M, this looks very impressive. And on the daily, it's just a simple previous day high sweep into a gap. The higher time frame gives your context. That's all it is. The higher time frame gives you the context you need. So on the daily, it's just a previous day high sweep. And on the 1 minute, it looks impressive as fuck, but it really isn't. All right. I hope that answers your question, by the way. Vadim, hope that answers it. How do you correctly do top-down analysis? It's not going to go too in depth because my mentorship people will get angry at me, but it's monthly, weekly, daily 4 hour. That's it. Monthly, weekly, daily 4 hour. That's it. No lower time frame. Top-down is monthly, weekly, daily 4 hour for me. And just pay attention to the premium discount rates, etc., etc. Let's see. Yeah, I just wondered because given the data metrics opens up at these awareness to gather. Yeah, exactly. Yeah, that's true. I do have some things I've gathered data on. So I also shared it on Twitter, I believe. Mean threshold, for example, stuff like this. I do have some data stuff, essentially, just on specific topics. Okay, thanks for the answer. No worries. I read that one, I think. Do you do forecast every day and which pairs? And also, do you do end of the day markups? What happened to today's PA? Yes, end of the day markups. Ooh, they are crucial. Absolutely crucial. So it's a great thing you mentioned it. So yes, end of day markups always. And you can even do them at the end of the week, for example. Do you do a forecast every day and which pairs? It looks and it depends on which pair I'm looking at for the week. So I try to look at the futures contracts and see which pairs I like for the week. And then I forecast those pairs. Now, it's very crucial that you don't overwhelm yourself. So don't look at 1,000 pairs at once. Just stick to maximum 2 pairs for the week. And study those. If they don't provide any entry, perfectly fine. Then it is what it is. ICT for the past 2 weeks has said people should stay out of the market. So I agreed with you when you say it's trading psychology. Traders who lose don't understand. Yeah, exactly. True. Exactly. Yeah, and it's a thing, right? People still want to trade every day, and it's so detrimental. Trading isn't even. I wouldn't even enjoy trading every day. It's absolutely I would probably get depressed and end up in a burnout because it's so heavy for your mental health. Yes, this is what I meant. Do you let people know how variables you gather data on? Yes. Yeah, for sure. Yeah, exactly. Yeah. All right. Oh yeah. Then I misunderstood your question, I think. All right. Yeah, that's I do that. Yeah. So would you change your bias daily or weekly? You didn't say what you do. So would you change your bias daily or weekly? Well, if the weekly is still going down and we know this, then the daily wouldn't switch up all of a sudden. So you would still just essentially still assume that the week is going down based off of the weekly and the monthly. So the daily doesn't switch. So to answer your question, I would stick to a weekly bias and not a daily bias. So the weekly bias is stronger than the daily bias. So every Sunday I might switch my bias, if that makes sense. Thanks. Can you tell me how to correctly draw premium and discount arrays of different time frames? You can take a look at my A to Z guide if you do want. And I'll tell you how to, because we're just going over the PD arrays. And on different time frames, it's just a matter of going up time frames and down time frames. That's all there is to it. Thanks for answering my question. No worries. I recently just learned PD array from one of your videos. Thanks for it. Hey, love to hear that. No worries. My pleasure. What is your psychology problem when trading? What were psychology problems in the past and how did you solve them? Ooh, there's a lot. There's a lot of psychology problems. Well, I think in trading, it's funny because I always tell people getting to a draw on liquidity, etc., the technical stuff, it's a very personal thing. And psychology is also a personal thing. But people, in the psychology factor of trading, people tend to have a lot of the same problems. and not really problems, but I like to call them obstacles because it's not really a problem. It's normal. It's normal. It happens. It happens to everyone. It's just an obstacle we need to get over. And a lot of my psychology problems were, I would say that I didn't take demos seriously. So I would get in too early. That's what I would do a lot of times. So, for example, you see a lot of people, they trade demo and they say, all right, I'm going to enter a little bit early because I know it's already going to go there. It didn't even give your entry model just yet, but you just enter prematurely and you think, all right, it's going to go there, so I'm just going to enter prematurely. And if it's a live account, I'll just do it fine. In the live account, I'll do it better. No, you won't do it better in the live account. Just these unhealthy habits, that's what I like to call them, these unhealthy habits that you build in the demo account, they will transfer to your live account and you will do the exact same thing in your live account as well. So that's very important to understand that building healthy habits in demo, they will absolutely benefit you in your live trading as well. If that makes sense. That was my biggest psychology problem, that I thought in demo I would just fuck around essentially, and then in live I would take it serious. That's not true. If you don't take demo serious, you will not take trading live serious. You might take it serious, but you will still do the same actions as you did on demo. Yeah, because as a technical trader, we essentially trade data points. Yeah, facts that identify certain actions in human behavior taking place over a series of trades. Yeah, true. So basically, how do you decide in which direction you will going to take a trade during the kill zone? Well, it's funny actually. That's all based off of the higher time frame. So before the week starts, essentially, I know if I'm going to trade, if I'm going to buy or sell during the kill zone. The kill zone is not that important. So for you, if you start off, essentially, I would say zoom out. Fuck everything on the lower time frame. Zoom out and try to predict every next candle on the monthly, weekly, daily 4 hour and see how far you can come, if that makes sense. And then that context of the monthly, weekly, daily 4 hour, eventually, if you master that, then it will tell you what to do during a kill zone. If it's in line with the monthly, weekly, daily 4 hour, if that makes sense. How many stops can you make per day and how many takes do you have to get out of the market? I take only one trade a day. I only trade London mainly. Here and there, very rarely, I trade New York. And it's also because reasons I like London. I like to trade London way better than New York. And that's not mainly because of price action, but because psychology. I wake up in London and I just get to do my thing and my day is essentially over. And I've done all the hard stuff in London in the morning for me and I'm done with it. That's why I like London. So if I take a loss in London, I'm done for the day. If I take a win in London, I'm done for the day. So I only take one trade a day. Whether it's a win or a loss, I quit. And that's what works for me the best. Because I used to sit behind charts the whole day and was not beneficial for my equity and for my mental equity. It was not beneficial as well. All right, so I want to thank everyone that was here. How long have we been live for? Almost an hour. Almost an hour. That's crazy. Didn't feel like an hour at all. How do you know when the market will change its trend? All based off of the higher time frame. And seeing if it's a swing failure or if it's a breaker pattern. Confirmation entries. Yeah, it's all confirmation entries, yeah. Confirmation entries. I'm not sure what you mean by confirmation. Hey bro, what's up brother? Did you just tune in? I'm going to end it right now. It's great that you're here though. All right, I want to thank everyone. It's in the Telegram, my chart candle template. You have to click on the top ones, the pinned messages, and you'll get to it eventually. All right, I want to thank everyone. Thank you for being here, and I hope to do this more often, maybe even during the week. Let's see if we can manage that. Thank you for being here, and I'll see everyone around. All right, thank you.